Hi, welcome to another episode of Cyber Ahead with AI, the podcast where we interview leaders and founders who are pushing the boundaries of technology with AI and innovation. Today, I'm very excited to have Leif. Welcome. First off, congratulations on what you called a monumental 2024. You had team growth, a new mobile app, and a spotlight on AI-assisted matching. It's clear that your company, WealthVP, is pushing the envelope in private markets. But before we dive too deep, I'd love to learn a little bit about you and your background, Leif.
Hey, thank you. It's wonderful to be here. Yeah, again, my name is Leif Hartwig, and I work with wealthvp.com. My background, I've been in financial services for decades, really. Started out in the late 1980s as an investment advisor and grew to be like one of the top people in my firm, top 5 people in my firm. Moved on, and I was just a serial entrepreneur. So even though I was doing very well and making a nice living and having a nice net worth, I really wanted to be more of an entrepreneur and not just manage accounts for the rest of my life. And so for all of those entrepreneurs that are watching this, we've got something in our blood that we have to continue to grow. And so I've done a series of different companies. The first one after I left, after 17 years in that investment advisory role, I started a international coaching company that we taught in groups of folks all around the US and Canada. I think at one point I had visited over 70 different cities, put over 10,000 people through the program, and mainly worked with high-end financial service companies. Probably our biggest ones were in the insurance industry with State Farm, Nationwide, London Life of Canada, and other smaller broker dealers. But 2008, as smart as I was, it just got us, man. It was like they were turning off the spigot. So we hung in there for a few more years, and then I said, it's really time to make a change. And as I was traveling around the airports, it was pretty obvious. This is like in 2011, 2012, that people were going online with everything. It was a big revolution like we're seeing today with AI. And so I developed a unified collaboration suite of tools and a company that instead of signing up for all these different desperate apps out there, we had generic apps altogether. And the vision was we wanted to be a unicorn, $1 billion private company. And I had one big investor that came in, and he believed in my vision so much, we had a hostile takeover for the company. And he had more money in than my group did. And so we had a little exit on that last year, which was nice for our investors. And they actually put a significant amount back into this company. So after I left, I started Wealth Venture Partners, which is a long name for WealthVP. And I helped a few companies as a fractional CEO, helped raise money. And, the first one we did went from 0 to 20 million in value in like 9 months. So I said, wow, I think I picked a good company to start with. The next few, we had a hard time raising money in Phoenix in the summer. Of course, it's so darn hot. No one with money is here in the summer anyway. And they were mostly real estate investors here back a few years ago. So that leads into this company of what I designed, because I took a couple days off, took my own coaching advice and said, what's going on out there? Why is it so hard to raise money for startups? And what I found after being out of the financial services industry as an advisor for so long, the middle marketplace that we were playing in. So as a definition, crowdfunding on the bottom, public companies on top, and this marketplace that used to be relatively small, where venture capital really funded all the good companies there years ago. Little companies like Facebook and LinkedIn and all of those early companies that had no revenues, but they took a chance on those. Well, the industry has evolved into a $5 trillion a year marketplace with 5.5 million new startups every year in the US. And so in football terms, the market kicked its coverage for VCs. They only fund 1% of VCs. Can you imagine only 15 to 20,000 companies a year when there's over 2 million seeking money? So when I saw that, I said, wow, now what's happening with the companies that are trying to get money and raise money and funding? Do you know that They have a super high bankruptcy type rate. 92% fail. 92% of the good companies fail, not the 1 and 2 person mom and pop businesses. And so I said, hey, this is a bigger problem than just helping 2 to 5 companies a year. And with that, I said, if you're a Star Trek fan out there, this is the final frontier. This is the last undigitized marketplace in the world that's this big. And there's plenty of assets to fund these companies. If you would believe Larry Fink, the CEO of BlackRock, he would say that there's over $20 trillion on the sidelines right now. And so, but there's no way, or there wasn't until we developed this software, that you could match great companies to a community of investors. And one of my big multi-billion dollar RIAs said, oh, I get it. It's kind of like Match.com meets Shark Tank. And I said, yeah, and it's more than that. And I think that'll come out in the rest of our conversations. But that's a little history on me and how Wealth VP kind of came about through a series of successes and failures and then finding the marketplace.
That's an amazing journey and an amazing story. Thanks for sharing that, Leif. Clearly, you have the entrepreneur, that founder mindset, that bug that just keeps you going, Everything is just a learning. And I love that learner's mindset that you've had that have helped you pivot and help you kind of find these opportunities. Your model emphasizes, so you said you match these founders with relevant investors, and your model emphasizes curation and warm intros over welcome. So was there a moment that made you double down on values and trust as core differentiators?
Values and trust is important on both sides of the market, both to founders and to investors, but probably even more so with investors. That how do you find investors that want to engage? And that their number one thing is people and trust. And so I hired a business coach. Actually, my first investor came in and said, I've got a great business coach. And one of the things that I want you to do is I want you to hire him if I'm going to give you some money. And I said, well, okay. And me being a business coach, I thought, well, what can he tell me? Well, he told me a lot. He said, the baby boomers always start with, how are we going to do this? And Gen Xers and millennials and people in the Silicon Valley like you, they always talk about what's the why? Why are we doing this?
That's
And
right.
so,
That's exactly right.
so then he said, we're going to take a step before that. He said, I believe if you want to have a successful company, you must base that company and the product and the management and your ideals on values. And so we spent a couple weeks talking about personal values like family, faith, honesty, integrity, character, all of that. And what I learned, and maybe the mistake I made with the kind of hostile takeover before, is if you base it on money, everybody gets greedy and it's not about the product. And so over the last few years, as we built the product, we pivoted with those values and leaving the world in a better place kind of mentality, but also with the idea that we didn't want to be the Mother Teresa, of business, that we wanted to have great values, but great business, you're judged by the value of, if people are going to pay you, then there's that value that they perceive, right? And if there's no value, then, and you're not asking for it, you can't. So to answer your question, that's what we did through trust and developed a product, and we've made a lot of pivots. We've had successes, but we've had some failures. And as all the entrepreneurs know out there, it is tough. It's a grind. And when things don't work, you just have to be positive and you have to say, okay, that didn't work. Let's listen and then find out what is that thing we need to do to be successful and help these folks.
I love the fact that, you easily summed up not talking about the how. I know a lot of people are focused on the why, but there's something that comes even before the why, and that's your core values. It's almost a compass of sorts for how to operate and how you do business. And I think that that's very deep. Thanks for sharing that.
Oh, you're welcome. That's where we live. And when I talk to an investor, all of those of you out there that are seeking investments for your company, I think you need to tell that story, because I've found that investors, they want two things. They want to make money, but they also want to help, and they want to know the person behind the company, because there's a lot of great ideas. And I found one of the entrepreneur's disease is this: we've got such a great company, everybody's going to invest in me. Why wouldn't they? It's so great. And then they don't. And then we've evolved into almost 20-to-1 presentations for the one person that invests. And it's just not understood. And so, we found that many of those companies that are trying to raise money, they're just not investor ready, and they don't understand that investor. And so we try to teach those companies how to become more investor ready. And that was really there was two missing links in our product. The Match.com meets Shark Tank, that's our foundation. But if that's all you do, it doesn't work. And there's been a million companies, well, not a million, there's been dozens of companies that have tried this and failed. And the reputation in the industry is not really good, because there's a lot of companies that will charge you $5,000 to $25,000 up front, and then they won't do anything, and then these companies lose their money and go under. So we found out that there was two main things that needed to happen. One is companies needed to be investor ready, which means their pitch decks are really good, which 99% aren't. Their valuations are good, and they really know what they're talking about and how to present. Yet founders, as you know, are really brilliant folks, but in their area of expertise, which typically isn't raising money.
That's right.
So the other side, because it's a two-sided platform, what do investors want? They want quality. Now, what does that mean? Does that mean no pre-seeds, no pre-revenue? Well, that's what we thought. But what we found is there's a lot of investors that want to get some diamonds in the rough. Others want, hey, we want to have, $5 million of annual recurring revenues before we talk to you. So there's a difference. So people on our platform, when raising, $500,000 looks like someone who's raising $50 million. And they have to go through a series of hoops and jumps to be on the platform, to be represented in a way that is quality.
I mean, I could have used your help not too long ago.
Well, I'd be glad to go into a little bit of detail, but just, what would you like to know? What more would you like to know?
No, I just thought that it's amazing how you have both sides of the aisle, and you're right, with a lot of founders and all their brilliance, a lot of times, there's a lot of ideas, but it's very difficult to be able to articulate your core value proposition. It's very difficult to articulate why you're doing this and what's driving you. And a lot of that is the storytelling bit of how you know, take the how, but then you package it in a way for the investor so that it's better digestible. And then you can actually start to get the funding that you want. But people often have that misconception that everyone's just going to understand what they're working on, but that's just not the reality of the market.
Well, if we want to kind of use this tangent about what do investors want versus what companies give them, I can give you one big tip of
Please.
why it's not working. And I've fallen into this too, that when you become an entrepreneur, at first you go to friends and family, to raise some money, and you talked about, hey, we're going to make a lot of money and the investment's great. And we're still developing the product. And so you get all this money in, and almost everybody you talk to puts something in. Okay. Then as you grow and you need more capital, you develop this product, and it's unbelievably good, right? And so your presentation stops being about the investment and starts being about the product. So for months, I was having people say, hey, I love what you're saying. I'd love to join your platform. And I'm going, well, that's great, but I want your money. Presentation. Me, I had entrepreneur's disease again. I thought it was, you know, the product was so good that we wanted to tell about that. So here's an idea. You want to say things like up front, although we've got a great product, here's basically the investment. We want a 10 times return in 2 to 3 years. We've mitigated risk by doing our pilot program. So we've reduced risk. We have in our company, we have a tax write-off. We have preferences in the safe note that give you a lower price on it, and we'll also give you a preferential return in this round. Okay. All of a sudden, they're like, okay, I'm interested. You mean
Now you're talking my language. You're
I
right.
invest $100,000, I can get 1,000,000 in the next couple years? Okay, so now you got their interest, and now you have to say, how are we gonna do it? And you have to tell the story about the product and all those things that we all know, that it's storytelling and empathetic selling, that getting them engaged with something that they can look at. But so the tip here today is there's 2 types of presentations. One is a product presentation to get business, the other is an investor presentation. And I see the great majority, like 70-80% of all the pitch decks I've been pitched is about the product versus about the investment. So hopefully those listening will take that idea and go, "Oh my gosh, I've done the same thing. How do I change it?"
I've done the same thing.
I
So
think
thank
we
you for sharing that.
we all have.
So we've seen venture debt hit record highs in 2024, and with many founders seeking non-dilutive runway. At the same time, private market access is expanding, and about like 60% of wealth managers plan to increase allocations next year. How are you adapting your matching signals to reflect these shifts?
Well, the world is changing at light speed right now because of AI, right? And so that's a really broad topic. From the funding itself, debt versus equity, we have developed a platform that is a matching platform. So it's not one where we assure an investment, but everybody wants the investment. So our internal goals, we want you to get an investment too. But being outside the SEC rules, if in fact we go into it and start sharing, you know, getting commission or getting a carry or a part of the company on the back from an equity standpoint, that doesn't put us in a neutral position to make sure everybody is treated the same. But the SEC also says that you have to become a broker dealer when the costs involved and everything else are not great. So we've become this neutral platform that as you sign up to the platform, you can say, I want equity, debt, convertible notes, which is debt. You can do safe notes. You can do all kinds of different securities, and you get to choose. I think a combination of equity and debt is always good because the non-dilutive part of debt is great. But as you know, in the industry, some of the kind of difficult lenders out there will charge really high interest, and that'll put you under too. Okay, so what's a balance? And it's maybe too long of a subject in this podcast to talk about that subject. I'd love to come back again, and we can do that. So I don't know if I answered your question, but we at WealthVP, we just charge a monthly recurring fee, subscription price, and we've set it so low, it's ridiculous that I think, 100% of the people should be on it, and our goal is to have 1,000,000 founders on the platform.
How are you reaching out to these founders today?
Well, again, we've tried and failed of doing things, and we finally got it. So and let me talk about this volume deal. How do you do that? So instead of going out just through all the meta things and SEO, we know that if you want to create a large amount of followers and subscribers quickly, you have to have a go-to-market strategy that will allow that to happen, right? So instead of what I lovingly call onesie twosies, that you are bringing people one and two at a time. You have to have, first of all, viral marketing in your platform, and we're doing some upgrades right now that will give values to that referring source, the subscriber on our platform, as well as bring in a lot of people. So, right up front, you need to be doing that if you're in a software type platform or any kind of product to get that viral marketing going. But on the company side, we found two uh, main entities that give us our deal flow. One is accelerators and incubators because they're helping companies not raise money so much, but they're helping them form a very viable company for now and in the future. And then venture capital companies, because they're turning away 99% of their deals. We have a comprehensive program that we've developed. I don't want to mention on here right now because it's proprietary, and it incents the venture capital companies so they can get what they want, but they also, with all their rejections that they give us, we can actually do some revenue sharing and some nice things for them too. So that's how we bring in founders in.
That's awesome. That's a very clever way of, I might be using the wrong terms here, but take a carry on your rejections.
Yeah, and what we found with venture companies is they can't possibly handle the deal flow. And most of them, not all of them, some of our if you've dealt with some of them are arrogant and they have the money so they can kind of make the rules. But I'd say the great majority of venture companies feel bad every day they're rejecting these companies. And when we come to them and say we can help, they like the idea of being able to do a referral to the companies that they can't help out and say good luck. And so I think it's a win-win for all of us on that.
That's amazing. You recently launched a mobile app. What changed for your users? Are investors responding faster, or are founders completing onboarding more efficiently?
Yeah, so the world is mobile, and we have both desktop and mobile. And so when you want to, you're at home and maybe watching a ball game or something, you might want to go on the app. But when you go into Starbucks coffee or go in there, how many cell phones do you see versus computers?
Hmm.
It's just the way of the world. And so we've developed a robust mobile app that you can get everything on it that you can on the desktop. So I think with anybody that and I this sounds so basic, but we all have to have mobile apps, right? Yeah, it's just
Absolutely.
it's a basic basic thing. So I here's an example that we think is kind of fun. So with our AI feature, our AI concierge, if someone that's listening to this podcast comes on WealthVP, and by the way, it's free to join, which is pretty cool, right? And then if you upgrade, we have an AI concierge feature that every minute of every day, that AI is searching for investors and new investors we add on the platform. And we'll introduce you to them because the investors have said, we don't want to be bombarded by 1,000 companies a day. And if you think you're going to go under, you're desperate, right? You're connecting with everybody you possibly can. And although right now we're allowing that, in the future, it'll be up to the AI concierge to scrape all your information, put that in a voiceover format as well as in writing, and would tell the investor, "Oh, by the way, John Doe, um, we have a med tech company that looks like it's gonna be of value to you. It has a patch, it's been FDA approved, they have 18 employees, they've raised $2.5 million, they're in a $3 million round, and it's in a preferred stock. Would you like me to connect you with them and message them?" That's pretty cool, right? So
That is very cool.
imagine the time and efforts being saved because we can do this. It would save hundreds of hours of detail working through investment deals that you get in seconds with us. So upgrade, which is super expensive, it's $49.99, $49.99. Be seen on the platform to get a world-class presentation and to be in this great group of high net worth founders and high net worth investors and high income investors.
That's amazing. I guess good segue to, with the rise of AI assisted matching, what have you learned about, using AI, but also bringing that together with, your core values?
Yeah, so the matching is AI matching, of course, is much better because you can get the right company to the right investor. So that's the key with AI. The Match.com type of matching, it's not AI, it's an algorithm.
Hmm.
It's not difficult to do. And we thought that if we could match, at first one-on-one, have as many investors as founders, wow, wouldn't that be a great ratio? It's not. It's terrible. Because in any one year, when you think about an investor, they might not invest in anything, or they might invest in 2 or 3 things in a good year, and that's the same with venture capital companies. So what you need is massive amounts of investors, which we're populating. We scaled up the population of our platform, and again, that is proprietary, because everybody wants investors, and we know how to do that now. But, but you need the big number because there's 2 reasons. One is that it's just like when you buy a car, you see advertisements on TV all the time. but you're not ready. And the advertisers know they have to be there when you're ready. And so you have to have a number of people out there just to pitch when they're ready, but also they're not ready if they invest in real estate, they're not gonna invest in a SaaS company, right? So you have to deliver the right information and the right opportunities en masse to be able to get these companies funded. So remember, we don't promise to get you funded, but our objective is to do that, okay? And so when we go back all the way back when we talked about my values, we didn't want people paying for something that didn't work. And most companies out there, that we compete against from an analog basis, "Oh, we've got a list of 40,000 investors. You need to come with us and pay us $5,000 to $20,000 up front." Well, what they have is an email list. That's all. Doesn't work. Okay. So what we've done is we've gone over and over with our values. And when we found companies complaining that, hey, we're not getting matched, and we're scratching our heads going, gosh, how can we do a better job at this? And it took us a few years and more than a few $1 million to figure this out.
Wow. And so how do you handle this challenge of, I guess, standardizing quality in deals or value for, I guess, both the parties?
So uh, I'm going to go back. And again, I like when people like to have stories. So as I went through my career with you as an investment advisor and then with business coaching and then with developing an app that would provide value, I didn't know when I arrived at this point at this age that I had spent all my life training for this, right? And so I knew investors and I had a great foundation of what they want, and I'd been an investor. Okay, so through a lot of questioning and polling and empathetic understanding, putting myself in their shoes, we developed the fields on our platform that they deem, not a founder, but they deem to be most important. And so we cobbled all those things together in this app so that when an investor comes in, just like for you and others on here, have you ever scrolled through Instagram Reels? Okay. I am so guilty of that. So I think I'm on for 5 minutes, and an hour later, I'm still watching these reels, right? And so we understand that videos are really important. So each company, we're layering this in right now, will have a pitch reel instead of a pitch. I mean, they'll have both. But so
Smart.
what do people want? It's better, faster, less expensive doing it this way because just as a reel, you'll see one, oh, I don't like it, right? You go to the next one. Oh, that's pretty cool. And then it gives you all the kinds of reels in that way. And so a seasoned or even not so seasoned investor can look through each one of the profiles and they can see right away, wow, I like this one, or no, just not for me. And they go on to the next one. And I want to tell your entrepreneurs, I want you to fall in love with getting no's. Because no is my second favorite answer. Maybe is my last favorite answer because you chase people forever and it ended up to be a no. And so the more no's you get, the closer you get to yeses. So don't get disappointed with no's. I know we're all competitive and so we don't like no, but it's then, okay, let's go to the next one. Forget about that. But I think especially when you're younger, you want to pursue those no's and you want to get them as opposed to saying, if you're wasting your time on that, you can't find the new people that would really be the yes people. So I
That's
don't
such
know.
sound advice.
I know we got off on a little bit of a tangent, but I'm a business coach, deep down. So, our goal here in the company is to help.
I really appreciate you saying that, and it is very deep. I was reading this study, and you'd mentioned that 93% of startups fail, and there was some bigger number for 98, maybe 99 first-time founders fail. When the same founders do a second time, they win 70% of the time, and that's basically what you're saying. Every single no is one step closer to the yes.
And let's try to fix that with any first time founders on there because the most important thing that a seasoned investors look for is not the product. It's it's the founder and the executives. Have they had successes in the past? And if you haven't, how do you compete? Well, you compete by getting an advisory board together with people that have had that experience, and then you put them on your slide deck and you say, "Oh, we've got, 100 years worth of experience with our advisory group. They've had, 35 exits in total. They brought in, over $100 million of exit value. So you must find a way to do that. And the first time founders, it's not often they're very successful, right? Because you have to be beat up a little bit and we learn much more from our failures than we do from our successes.
Thanks for sharing that, Leif. That's deep. So, when some investors say we already have deal flow, how do you address those type of like objections?
So investors that come to me and say they've got enough deal flow, for instance, venture capital companies, they all have enough deal flow. They have more than enough. So that's okay. That's a no, right? We have found ways that, again, how to that I don't want to be public knowledge right now, but we know what they want and we can provide that to them as long as they work with us. And and I think we add equal value to what they could do. But if we I have like a three-legged chair, which is going to a two-legged chair pretty quickly because we're in a $3 million fundraising round right now. And as soon as that's closed, so that's number one of people that like what we're saying. We'd love for them to, talk to me and they can look at the investment. But the other two things, if I have someone that says we have more than enough deal flow, I would say, we'd love to partner with you on. So any of the deal flow that you're getting that's excess, send them to us. And we probably know that if you're investing in a company, they need more investment too, right? And so we don't have
That's
competition.
smart.
We're saying let's all work together on this problem. In fact, I would tell a company that's on our platform, we're just another hook in the water for you. We hope we do it for you, but if we don't, try as many things as you can, because this is raising money is the hardest thing the founder will ever do. The rest is relatively easy in comparison. So the three-legged chair, we're raising money, we're bringing in founders, we're bringing in investors, and we think it's a mutually beneficial way that we can help any of those entities that have the ability to do that become stronger with us.
Awesome. Well, I'm rooting for you guys. So
Thank you.
looking ahead,
This is something everybody should hear, that we love people like you that are supportive, and I'll take all the support and luck I can get. So we work hard, and then sometimes you have to be at the right place at the right time. But right now with AI, and if I can make this last comment on AI, that everybody with every product needs to dive into this and figure out a way that you can be involved. There's been some great changes in the world when the internet came on and then email came on and all this. This is the next thing that we can say is the biggest thing to happen in our lifetime.
yep,
And if not for AI, we were figuring out the problem and we couldn't until AI came along and now we've got the solution. But it took that to get it. So all the stars and the moon are aligned for us right now. Make sure that you're in that alignment because it's critically important.
thanks for sharing that. It is a crazy day and age, and AI is absolutely a game changer. And so looking ahead, what's next?
Well, we've spent all this time figuring out the problem. So right now, it's our number one goal. We'll continue to keep up with the software, so it's ahead of the marketplace. But now all about gaining subscribers and gaining business right now. And that is my number one focus. So we changed a year ago, a little over a year ago, we were charging $1,000 a month for our product and getting it. But it didn't meet the software as a service exit platform of low churn rates, low attrition rates. And so people would either get their investment or they wouldn't, and then they would churn from our platform. And so after lowering prices and finding out things, we took a look at the unicorn list. And any of your listeners that don't know what that is, it's a list of private companies worth $1 billion or more. And back in the early 2000s, there was probably maybe a dozen. In 2015, there was, I think it was 39 or 40. There's over 1,500 now worth over $1 billion. Okay. So how many are worth over 100 million? It's got to be in many thousands, 10,000, 20,000. And when we did the statistics on that, 87% had software at their core. And as far as SaaS companies, when you start to look at the large companies that have made it, including Facebook and Dropbox and Zoom and all the other ones, they offered a free freemium type product. And then they would upsell with greater value for those people that want to join. In fact, I probably challenge you all to say, have you ever gotten in an app that it wasn't for free at first? So our free model gives your advertisement on what is, if we have 1 million people, it's going to look like the middle market exchange, right? That you're going to have to be on there whether you have a need for fundraising or not. And so, but to get that for free and get some other valuation tools and everything that are extremely valuable, you're crazy not just to do that. Now you do have to qualify, and that's our AI tools will say, if you don't have a website, you don't get on. Okay, then you have to walk through a voice activated onboarding, and you have to have 95% of all of the fields completed because that's our product. That's our deal flow. And so it is exclusive in that way that when you're done, you could actually be sitting across a kitchen table from an investor, bring up the WealthVP platform, and has everything there to show them for your presentation. Pretty cool. Okay.
That's
So,
amazing.
and why we did that is to get you to the hook. And then when you come in and pay for the automatic matching at such a low price, our thought was, if you're willing to pay $50 a month for a date, would you do that to find an investor? And if you say no to that,
Good.
you're out of your frickin' mind, right? Because this
Mhm.
is the easy way to do it. And people ask us, why don't we take, a part of the company? Why don't we take commissions? Because a SaaS model, you get 10 times top line values when you exit, not 5 times your EBITDA, which means the reason that there's so many billion-dollar companies that are software as a service companies is because the exit model is 10 times better than a regular earnings type model. Okay, so if someone out there is saying, "Hey, they're too cheap, it's not worth it." Yeah, we are, and we all wanna win with this, and we don't have to charge a lot of money for you to have great value.
That's a very, very powerful platform you have there.
Well, thank you, and I love your questions, and this has been a lot of fun. What else would you like to know?
Indeed. So, are there new features, partnerships, markets you're excited about?
Well, right now, yeah, in the future, first, when you launch a platform like ours, I use a phrase that you wanna be an inch wide and a mile deep. Okay. So you always want us, and entrepreneurs, we have so many different ideas. We keep changing things and that screws you up. Okay. So, so we're staying focused right now on matching startups, founders with high net worth investors. But imagine this, that the founders are kind of like people that purchase products on Amazon, right?
Hmm.
And they have the money, they're the clients. What is the product on Amazon? It's all the retailers and people like that. So we think that there's a whole marketplace for investors like this, including venture capital companies, M&A. Baby boomers are trying to get out of their business and there's no marketplace for that, right? So we can have verticals where we can match companies through mergers and acquisitions. Real estate sponsors that are private, not the public companies, but private companies, they don't have a great conduit on where to find money. And in fact, we had a real estate division that really tested out well, but we thought, no, let's just focus on the narrow marketplace and we'll do something that in the industry that's called land and expand. So you take a step out once you get the foothold, but you have to establish your brand. So to answer your question, the future is big. And in fact, right now we're entertaining partnership programs with lawyers, accountants, pitch deck people. They all want to get to our deal, right? They like to help them and they need the help. So instead of just being a partner where they have their logo on some page on our website, we will actually be able to put fields on let's say the founders say, hey, I need an accountant. I need more legal advice. I need this. We can actually then match them directly with who wants them. So that'll be another.
So this is beyond an investor matching. This is matching for
Yeah,
all
it
needs.
is. So, but
That's amazing.
you think big and start small. So I usually don't even talk about that on podcasts because I don't want to confuse the marketplace out there that what we do right now is a great service, but in the future, it's just gonna blow up, right? So,
Right. All right. So last question. And if you had a magic wand, what would you change
what would I change in our product or in the world or
in the product, go to market? What would you change?
right now? Nothing at this point, but it's always going to change. So right now we've spent actually $6 million and 4 years figuring this out. And it was hard. We could have gone under a number of times. And so right now we're exactly where we need to be right now, but we will continue to pivot as all companies do within our vertical. And so I think, my message to everybody out there is live in the present, think big. You usually typically have to start smaller. And what will take me from today to tomorrow? So we've made some major pivots, and we're in the middle of one right now with our go-to-market strategy because of AI that has just been in the last 2 weeks. And we had a different approach, and now it's like, oh my gosh, we can massively onboard subscribers, and we didn't know this was available to us. So, and again, I'm not going to disclose that in case there's some competitors out there listening. But so the answer to your question is, what would we change? Right now, we're happy with where we are, and every day is full of challenges. And when we see the need through our values and creating a better product that makes more sense, then we will make those changes as they come to us.
Awesome. I love that. Well, Leif, this has been fantastic. For listeners who want to learn more and get involved, what's the best way for them to connect?
Well, if you want to sign up to our platform, it's really simple. Go to wealthvp.com. It has a little thing on the upper right-hand corner that says sign up for free. You just toggle down to the founders or I think it's labeled companies, and it takes you through a sign-in process just for that. If you want to get a hold of me for some reason that, I piqued your interest in a way and you'd like to collaborate, I'm pretty easy. It's Leif, spelled L-E-I, at wealthvp.com, and I return all my emails.
Awesome, Leif. Well, it was so nice having you on the show. Thank you for taking the time. For our listeners, thank you for tuning in for another episode of Cyber Ahead with AI. Thank you.
Thank you.